Hey everybody, welcome to the iEmergent Inside Track, sponsored, provided by Acuma. We will be starting here in just a couple of minutes, so please just hang tight, and we will kick off here in about 2 minutes. Thank you so much. If you guys want, you could drop your location in the chat here. I am currently in northern Minnesota, where it is a lovely 15 degrees this morning. It's warming up though. It was minus 30 the other day. Welcome, everybody. We'll get started here in just a moment.
Hey everybody, this is Leslie from Depth, logged in as Laird. I got a notification that chat is disabled. It should now be enabled. Thanks, everybody.
Perfect. Yeah, it looks like that's working now, Leslie. Thank you. All right, everybody. Well, we'll get kicked off here. So thank you so much for joining us for the Inside Track today. I'm honored to kick off this Inside Track hosted by your colleague and colleagues at iEmergent. We have Bernard with us here today for his presentation. As an ACUMA affiliate member and ACUMA service provider, we appreciate iEmergent's commitment to educating credit unions. Stay tuned for insight on where to focus your mortgage lending efforts and how to grow responsibly in your communities. Also, everybody, 2026 for ACUMA is going to be nothing short of incredible. We have 5 in-person events this year, starting in March and April with our 3 summit meetings. These are free if you are a credit union or CUSO, so please look into that and please join us if you can. And then in May, we have our always popular workshop that will be in San Diego this year. And then, of course, our annual conference. We're looking forward to seeing everybody in Las Vegas at the beautiful Fontainebleau Hotel. Also, virtual education, like this webinar, our network meetings, and our podcast continue all year long. So just be sure to stay tuned to our LinkedIn page and our connected community for all of our daily updates. It's been great to work with Bernard at iEmergent, and I look forward to today's webinar. So Bernard, I'm going to hand it over to you. Thank you.
Thank you, Krista, and thank you, Acuma, for the opportunity, and welcome everyone. I'm actually presenting today from Iowa, from Des Moines, Iowa, actually. And I don't know if you can see in the bottom of my screen, this is 30 degrees right now, mostly cloudy. So that's what I'm dealing with. But thank you so much for being here. And actually, Krista mentioned that she's 3 hours north of Minneapolis. And we're actually going to be, in her honor, we're going to be covering the Minneapolis market today. So we're going to talk about an actionable playbook for credit union mortgage growth. So what does that entail? Well, we're going to look at steps to grow your market, specifically starting with data. So we're going to talk about data and all the things that are fantastic about data. Big data nerd over here. So if you are too, welcome. You're in good company. We're going to locate the gaps in coverage in your market. So identify areas where potentially, you're originating, but there is more business to be had. Then we're going to create mortgage opportunity zones, or MAZs, as we like to call them. That's basically just a custom market. It's a sub-market within a market, and being able to get a bigger return, a bigger ROI within your existing market, but without tackling the entire market. Then we're going to look at the competitive landscape. So what does that mean? It means who is already doing the loans there in terms of loan officers, in terms of other lenders, who are the real estate agents, both on the listing side and the buyer side agents, and who are the builders in your specific market or MOZ. Then we're going to take a look at the inventory, what's actually for sale, what's available for sale, and then we are going to identify community partners and talk about potential businesses to partner in your community in order to reach more members or to increase business. So this is going to be hopefully interactive, but at least I would love to answer any questions you have. The last 15 minutes or so are going to be reserved for Q&A, so please don't hesitate. If you want to ask a question, ask it in the chat, and I will be sure to get to it. All right. So let's start with the data. Well, what do we mean when we're talking about data? Well, they're both internal data and external data. Internal data is what you see on the right-hand side. Internal data is your LOS or your loans. What have you originated? So an example here on the map is that you see blue circles, and blue circles represent, I picked a lender that we're going to call ABC lender, this lender. So ABC lender originated the circles in blue. These are purchase loans that ABC lender originated in 2025 in Minneapolis. In addition to your loans, your branch locations, right? Where is your credit union located relative to the opportunity? So what do I mean by opportunity? Well, that gets us to the external data that you see on the left-hand side. So we are looking at the entirety of the Minneapolis market by census tract, and we're looking at our forecast for the census tract for 2026. So this is iEmergent's view of what's going to happen in this specific market. And you'll notice there's a legend at the bottom right. The blue census tracts represent fewer loans. The red census tracts represent more loans. So the idea is that we are looking at which specific neighborhoods within all of Minneapolis, which specific neighborhoods within Minneapolis offer or are going to have most of the opportunity or a lot of the opportunity as you take a look at deploying your resources, your time, energy, effort throughout the market in order to get more business. So the idea is whether you are looking at our forecast or your own forecast that you rely on in your business, you must know, or it's critical to know, where you are going to spend your finite resources in order to grab more business. And that's where the importance, the criticalness of the data comes to life, because by seeing something like this map on the right, you can see two things. You can see where you have been originating loans. So again, as a reminder, the blue dots are loans that have been originated by ABC Lender in 2025. And you can see where you have not been originating loans relative to the forecast, right? So the point is, when you bring together the internal and the external data sets, you can see, hey, we've been serving, this area, we've been serving Minneapolis, but there are areas where we've been lending, and yet there is even more, according to, the legend, there are some red and orange and yellow areas where there's even more opportunity to be had. There's even more business in our own backyards relative to our branches and where we have already been originating so far. All right, that's step one. Step two now is, all right, once we have the data, once we can see where we are, it's locating gaps in coverage. So what does that mean? Well, like I mentioned before, so we're going to focus on this specific area northwest of downtown Minneapolis, and here it is, zoomed in, where we identify based on the forecast that there is going to be a lot of opportunity there, but that, we haven't necessarily covered as much as we could have. So this is this area specifically is called Rogers, Minnesota, and hopefully, if anyone is from Minnesota or works in the Minneapolis area, from your experience, your own market, and you can say, oh yeah, Rogers, that's a growing area, or I know that area, and there's a lot of construction, or there's a lot of activity, a lot of mortgage activity here. So hopefully that matches up with what we are displaying. Um, I mean, if you look at this left-hand side on the map as well, I'm actually gonna go to this is our tool that I like to use, but I'm gonna show you on the map what that looks like so you have a better view, more zoomed in. So this is the view of Minneapolis market, but by county. And at this view, we're looking at county in terms of total opportunity. So, for example, Hennepin County by itself is going to be a $6.4 billion purchase market this year. And then what I showed you in the PowerPoint is a more granular view where we're looking at the neighborhoods or the census tracts. And what I had was we had our branches represented by these yellow stars, and we had our purchase loans represented by these blue dots. So you can see clearly, oh yeah, this is an area right here, this Rogers area is definitely one where, we are lending currently, and we potentially already have existing members here. But there is going to be a lot of opportunity. How do I know? Well, when I click on each census tract or each neighborhood, for example, this orange one, we are forecasting, 224 purchase loans in this square. Just to the north, another 314. To the north of that, another 122, another 105, another 201, another 222. We're easily looking at north of 1,000 loans, again, just in this neighborhood, in this area. And so the point when we're saying, hey, there are gaps in coverage, yeah, if I zoom out, there are absolutely here's a neighborhood that we haven't touched in 2025, and we are projecting 215 purchase loans here. So this is another area that we could consider potentially a gap in coverage. Anywhere where you're not seeing some of those blue circles, or even at this rate, there's so much opportunity that there's always more business to be had. So if I'm this lender, if I'm this credit union, and I see, all these blue dots, even if I hide my branches, I can say, hey, we're doing a good job covering most of the market, and we are, but there is absolutely more business to be had out there. So that's the point of identifying gaps in coverage. Okay, so then I'm gonna go to step three. Step three is creating mortgage opportunity zones, or MOZs. So what does that mean? It means that if we come back to this map, to this view, and we say, hey, this Rogers, Minnesota area, what would a submarket, what would a market consisting of just the areas that comprise Rogers, Minnesota, what does that look like? Well, we take it from the left map and say, yep, I see the red, orange, and yellow. And now on the right-hand map, I actually combine those contiguous census tracts to create this custom market or this mortgage opportunity zone in green. And so when we're talking about, we've just created this MOZ, this is the geography we're talking about. And you can still see those blue dots where this credit union originated loans. And in fact, I looked at some of the numbers. So in 2025, again, this is an estimate, 2025 data, 2025 HMDA won't be released until the end of March, FYI. But in 2025, this is our estimate that there were roughly 2,962 purchase units in this green area. This specific credit union originated 16 of them. So if you do the quick math here, that's a share of less than 1% in this targeted area. And we can see how much opportunity there's going to be on the left. So if we are forecasting in 2026, just under that, we're forecasting a total of about 2,855. So to maintain share, this credit union would need to originate another 15, 16 loans. Okay. But would you be, if you knew that there was so much opportunity in this area, not even in this entire market, but just in this neighborhood, in this MOZ, would you be happy originating another 15 loans? I wouldn't. I would say, hey, we can do better. There's more out there. Let's go grab it. So we've identified, so we've looked at the data, we've looked at where we are lending, we've created a mortgage opportunity zone or custom market. Now it's time to figure out, well, who is actually doing the business in this area? Who is doing what in this area? So again, specifically, we're focusing on this green geography. And in order to say for ABC Lender, for ABC Credit Union to gain more share, the hard part is really out of the way. The hard part is, where do we want to grow? Within our market, where are we going to focus our resources? And now what we have to do is figure out, okay, in this area we've targeted, who are the existing loan officers originating loans here? Who are the top other competitors originating loans here? Who are the agents, both on the listing side and on the buy side, who are listing properties in this green area, in this MOZ? And likewise, who are the top builders building properties in this area? So those are the four subgroups that we want to target, we want to identify in order to, complete our due diligence, our research on how we are going to grow in this MOZ. So we start with the top loan officers, and I know this is a little bit tiny, so this is a little bit small font, so I'm making it a little bit bigger. Hopefully you can see. So here are the top LOs in 2025 that originated in this MOZ, in this green area. So we have Drew of MI Financial, and Drew did 183 loans in the US in all of 2025, but he originated 80 of those in this green area. So what does that tell you? Well, it tells you that he's doing, just under, or about 40% of his business is done in this area. So Drew is definitely a player, a loan officer of interest if you're thinking about potentially recruiting. But you may look at this list and say, Bernard, all I see are builders. Well, that is That is true. We cannot change the facts, right? The facts say, hey, we have MI Financial, we have Lennar. These are all a lot of builder LOs. So now you have to ask yourself, as a credit union, do you want to compete here or not? If the answer is no, then great. The good news is that you know that you do not want to be here, and therefore you're not going to waste your resources attacking an area where you don't want to be. But if you do want to be here, if you say, yes, I do want to compete, then you have to ask yourself, do we have the right products to compete here? Can we look at this? Can we look at these builders and can we be competitive with any offering in this Moz? And there, if the answer is yes, then okay, wonderful. Keep that in the back of your mind, and then we're going to come back to it. But otherwise, going down this list, I actually highlighted the ninth person, Morgan Anderson, who actually does work for a credit union. So here she works Morgan works for Blaze Credit Union, did 254 loans in the US, and 31 of them were specifically in this Moz. So that's on the loan officer side. All right, we're going to continue. So Morgan did, 12% of her business in this custom market. All right, now we're going to go to the top lenders. So these are the top companies in the Moz. Well, you'll notice that at the individual level, we were spotting a lot of builders. And in fact, we still see some of those builders here, such as MI Financial and Pulte. However, you do see that the top builders in this area are also some IMBs. But I did highlight we have a credit union, Trust One Financial Credit Union. So how to read this is Trust One did 2,493 loans. And by the way, these are specifically purchase loans. Did 2,493 purchase loans in the US. 116 of them were done in this green area. And that equates to a unit share of 2.8%. So again, going back up to the individual loan officers, we see a lot of builders up here, right? But when we look at it by the organization, you can say, hey, wait a minute, Trust One Financial is a credit union. What do they have? What are they offering that potentially I can offer for my credit union? How are they competing? Okay. Excellent. Thank you. So next, let's go to the top listing agents. So same idea. We're now we are still in this green area, and we're focusing on who is actually listing properties here. Okay, I see Lennar, Minnesota. They're probably associated with Lennar and that build. That's great. But then I see Josh and Patty and Lamar and all that. Okay, so here I highlighted Jeff. Same concept. Jeff works with Capstone Realty. This was his production. The first three columns represent his production in the US. And the next three columns represent his production in this specific Moz. You'll notice that these numbers are identical. What does that mean? It means that he's done all of his business in this Moz, in Rogers, Minnesota. So, although Jeff hasn't done as many loans as, hasn't done as many listings as, let's say, Josh with JPW Realty, because Josh did 312, 100% of Jeff's business is done in this area. So again, he's not as prolific as Josh, but he is a big player in this area because that's where he's doing all of his business. So the point is to be able to use this information or use this tool to really figure out and be intentional about which agents you are developing relationships with. All right. So I see there's a question. Will this recording be shared? I believe we will share this recording. So, but more on that during the Q&A. But Ron, yeah, absolutely. Good to see you in here. Okay, so back to this. Yep, here are the top agents from 2025. Here was Jeff. He did 100% of his business in this Moz. All right, and then we go to, okay, if we're going to look at agents, we need to look at both listing agents and buy-side agents. So here, this example, this is Christopher Fritsch, works for eXp Realty, did 77 buy-side transactions in the US. 17 of them were in this specific area. So if I'm a loan officer and I'm looking at this and I say, hey, I work exclusively, or I prefer to work with buy-side agents, well, this becomes my list of here are the top agents in this area that we have identified we want to grow in. And therefore, do I have an existing relationship with Christopher? If yes, great. Then he's one of the big players on the buy side. And if no, it's okay. Well, how do I get into Chris's sphere, into Chris's environment, right? How do I get his attention? How do I figure out how to get some of that business? So we're going to get to that in a second, but the point is to be able to say, all right, here's my list of top folks, and let me see who I would like to pursue, or who I want to do business with. Okay, and then we have the top builders. So there are two tables. I'm going to alert you to the first one. I'm going to have you focus on the first one. So this is saying here in this green area in our Moz, these were the top builders in 2025. So you can see the name of the builders. You can see their production in units and dollars. Now, that's good to know, right? That's one piece of working with builders. But the other piece is also knowing the right-hand side of the table, which is, do these builders have captive lenders? Are they working with specific mortgage companies associated with builders? And some of these captive lenders are highlighted in purple. So US Home, built 469 units in this area in 2025. And by the way, 346 of these were funded by Lennar Mortgage. So this tells me that, okay, although Lennar usually works with Lennar a builder, Lennar Mortgage works with Lennar Builder, it looks like US Home may have a relationship with Lennar whereby the majority of Lennar's properties are financed through Lennar. So, and in fact, you can see that 73% of US Homes builds were financed by Lennar Mortgage. And that's what this column identifies. So MI Homes works with MI Financial 90% of the time. Pulte Homes works with Pulte Mortgage 81% of the time. Again, what do you do if you're an LO looking at this information? What does this mean? It means that you need to figure out if there is enough business for you to spend your time trying to forge a relationship, trying to develop a relationship. If I saw this, for example, Capstone Homes did 125 units in this Moz, and 30 of them were financed by SFMC, then this tells me that 24% of their builds were financed by one lender. That means that there is 76% available through, in smaller chunks. Can I, as a specific credit union, can I break into that and start working with Capstone? Again, if you say yes, you can because you have a specific build product, then it would be finding out and spreading that information, calling Capstone Homes and the folks associated there to say, hey, I'm with, ABC Credit Union, and we can absolutely compete with SFMC. And in fact, here are our products and what we can do to compete. And same with, some of these other folks where I said, hey, JP Brooks was the number 8 lender, or excuse me, the number 8 builder. They did 32 properties. Seven of them were with Bell Bank for 21%. Okay. So that kind of takes care of and identifies the competitive landscape of looking at who are the top LOs, who are the top companies, who are the top agents on the listing side and the buy side, and who are the top builders. Think of them as these are all of the industry players that you should know or have information about if you are going to compete in this area. All right. Next is review the inventory. Well, let's take a look at what we're talking about. Here, every diamond that you see, and I'm going to scroll down so you can see all the colors. Every diamond that you see represents an MLS listing for a property that was added to the market in the past 14 days. And in fact, I pulled this together yesterday. So, this specific property has been on the market 11 days. And you can see that. So the point is that I can click on that diamond. I can see the MLS number. I can see the agent name and contact info. And if I am interested in this property, or if I'm a loan officer and I'm interested in talking to Max, then what I can do is I can click right here on this little Zillow icon, and I'm going to go here and show you what I mean. So, let me take a quick look. All right, we're right in the middle there, that fellow. Okay, so here's that property. So what I would do is say, great, this, I'd like to talk to Max about this specific property. I could click on this little Zillow link. It would open in Zillow. It would tell me, hey, there's an open house on this property on Saturday coming up. And yep, it's active. It is on the market. I am confirming that everything looks good as an LO. And now I am ready to pick up the phone or email Max and say, hey, Max, this is, Bernard from ABC Credit Union. I noticed that, you have a property for sale on 45th Court. Did you know that at my company at ABC, we have a specific product that can help you sell this property faster? We have a specific program, such as down payment assistance or a grant program for which this property qualifies. We can help save your borrowers a lot of money at closing. Work with us. Or 3, we have a specific member that has been pre-approved, and we are, they're looking to move into this neighborhood, this member. So let's see if it's a fit. But work with ABC because we are providing you this value. And that is how you start breaking in to a specific agent's, book of business or relationship. This is how you develop those relationships by bringing them value, so that they can, use your credit union as the lender of choice. And so we can, and the idea is that you don't have to click on each individual uh, diamond to be able to see all the different properties. You can have this right in a spreadsheet view so that you can export it to Excel and then have it in your own spreadsheet and manipulate it however you wish. So we'll give it another second here. Okay, there it goes. So you can see these are active land and residential properties that days on market is less than or equal to 14. And we have 1,447 such properties. Okay. So that is the inventory. And now let's talk about identifying community partners. So just want to remind you that we're going to have some Q&A here in about 5-10 minutes. Please do not hesitate to raise any questions in the chat. All right, so identifying community partners, what does that mean? What does that look like? All right, we are again in our green MOZ, our mortgage opportunity zone. And I have mapped two specific community partners. One represented by the green squares. These are faith-based institutions. So churches, synagogues, mosques, and so on, temples. Here you can see that I've clicked on this one specifically. This is the St. John's Church. And here's the address. And also on the left, in these triangles, these purple triangles, these are housing nonprofits. So this one, if I clicked on this one, this is 300 Roofs. Here's the address. This is a housing development management organization. So in either case, I would pick up the phone, or I would Google their address, right, and find out their contact info. And now I can call and talk to the leaders of those organizations to say, hey, this is Bernard from ABC Credit Union. We would love to sponsor an event you might be having. We would like to have a home buyer workshop. We would like to have a lunch and learn or anything of that nature. And here is the return. Here's what you get out of that. Number one is you're keeping the ABC Credit Union name top of mind for anyone associated with the organization. And number two, and this is even more important, I think, is that you are demonstrating your commitment to the community because you're investing in it. So in addition to places of worship and housing nonprofits, here are some examples of some of the other community partners we can show. We have schools, hospitals, HUD-approved counselors, libraries, VA centers. It's so important. I have libraries on there twice, so you know it's important. And then universities and more. In fact, we had a client that did a lot of business in his local Starbucks, and he wanted to find out if he could put Starbucks on the map. And we did that. We actually found all the Starbucks locations in his market, and we added them to the map. So just know that that locations, they're not set in stone. We can absolutely add to them depending on what you're looking to do. All right. So let's talk about the review of what I just presented. So to grow your markets, to grow in your markets, we start with the data. We want, again, both internal data and external data. We want to see your forecast for the market so that when you couple that with your internal data of your own originations, of your branch locations, you know where to go, where to focus your resources. Your resources are finite, so you need to make sure that you are focusing them in the right areas in order to grow. From there, you then locate any gaps in coverage. Where are you lending, and where are you lending maybe not enough relative to the potential in that neighborhood, in that market. From there, you want to create the mortgage opportunity zone or the custom market where you really want to focus your resources and then be able to identify who the main players are. Who are those loan officers? Who are the other lenders in there? Who are the agents? And then who are the builders? These are the folks who are moving the mortgage market in your market, and then specifically in your mortgage opportunity zone. 5 was review the inventory, be able to see what is actually for sale in your market. One thing I hear sometimes, there are, potentially some sales folks who are like, there's nothing for sale in this part of the market. Well, you can prove or disprove that with tools such as this to say, well, actually, 10 properties just came onto the market in the last week. Have you already talked to the agents there? So reviewing the inventory, what's available, and then from there, identifying the right community partners for you. Who can you team up with? Who can you partner with in order to, grow the message of your credit union being there for the community, your credit union there meeting their financial needs of all the members. This is absolutely, especially this number 6, step 6. It is not a year over year situation. It's not okay, we're gonna partner uh, with this church this year and we're done going forward. No, it's a repeat the process. You have to make sure that the message, your communication is you're hitting the potential members with your communication, your message year over year, and you're growing with the community, being able to spread your roots and spread the message that ABC Credit Union is there for you, whether you are members, great, or future members, even better. And then the last one, I didn't talk about this, but it's turning these steps into a habit, making sure that you routinely, I would say quarterly at the least, but routinely start with the data for your market, identify where it's going, and be able to add your originations to the map to be able to see over the course of the year, are you hitting the spots you want to hit? Are you originating loans in those areas you've identified where you want to grow? And creating those focused areas to be able to hit, and then doing your due diligence on the competitors and seeing what's for sale, and again reviewing, hey, are there new partners we can partner with to spread our message? So that is an actionable playbook to grow in your mortgage market for credit unions. Are there any questions or anything you'd like me to review? Clear? Yep. Okay. So the recording will be sent out later today. So feel free to drop anything else in the chat or in the Q&A. You know what? I have a question. Maybe this will spur some thinking. Based on what you see here, is this actionable? Do you think this could work? Or do you see this and you're like, ah, this is way off? I'm open to feedback, so happy to invite that. Don't hesitate to include comment or pushback. Excellent. Great. Appreciate that. Is there some way to identify if the buyer is an investor? Ooh, that is a tough one. Um, so, uh, okay, great. Thank you, Marie. Um, Identifying the buyer as an investor. Okay, well, what I like to do, we can, um, if I go back here, so this is our main tool. What I like to do is kind of go to this or originations by location. So this is our loan level detail, right? So here I'll click on, you know what? I'm going to click on Rogers because I have it saved in here. So we're going to look at the MOZ. This is the mortgage opportunity zone I saved, and I'm going to look at last year, so 2025, and I'm going to say refresh. Okay, so it said, hey, in 2025 we found 4,136 loans. These are all loan types. And I'm going to just do a quick export to Excel. Say transactions. And I think actually I did save this before because I think I looked at this yesterday. But yeah, Rogers 2025. Okay. So I'm gonna do a quick look right here. Minneapolis. Here it is. Okay. So this is the same file. And I'll show you what this looks like. This is opening. I believe. Yeah, listings. No, I want transactions. Oh, okay, yeah. All right, here it is. Okay, so this is the file. This is the to show you the query that I just worked on and saved. 4136 transactions, 4136. And so here are um, the loan level details. So to be able to do this, I am going to uh, we're using the question is there a way to identify if the buyer is an investor? So we can look at the buyer names and counts. And when I do this, I can then sort this by descending order for the count. So what I found is that I would assume, again, there is no flag. There's no flag identifying if the buyer is an investor. But what I can assume is looking at this information, I see value homes purchased for uh, properties in 2025. That would indicate to me that it's that this person or this institute could be or entity could be a buyer. You can see there are others like Derek Simmons. Is Derek Simmons an investor? I don't know, but he purchased 4 properties. So the point is that you could use the information this way to try to answer that question of whether somebody's a buyer. Of course, there are going to be, some one-offs especially when you get down to the number one of just individuals who bought a property. Clearly, they are not investors. But when you get into multiples, that's when you can investigate further. So hopefully that identifies that, or that answers that question. Another question from Sharika. Although it's on the elementary, I believe it's doable with a lot of hard knocks. Yes, turnaways, but you'll have to remain consistent in knocking the. Yes, that's the. Thank you for that comment. We're talking about building those habits. That's exactly right. If we go back. Yeah, is this rocket science? Absolutely not. No. It's just a question of this can work for you when you do them consistently over time. That's exactly right. Excellent. Any other last questions or comments? Wonderful. Well, again, look for this recording to be available later today. And otherwise, I have here's my contact info. If you have a comment that you'd like to share, here's our website just in case. But otherwise, thanks again very much for your time. Really appreciate it. And looking forward to, at the very least, seeing some of you at ACUMA Annual in Las Vegas later this year. So thanks again. Talk to you soon.